Did you get a tax refund this year? Is it smaller than you thought it would be? Consumer investigator Danielle Serino here now with the true winners and losers from last year's tax code change. And she also has some last-minute adjustments that could maximize your refund. Hi there, Danielle.
Hi, Russ. Let me start by saying I'm all for people saving money, and one way to do that is to prepare your own taxes. But this year, there are so many changes that unless you have the easiest return, hire someone just for this first season, because what you think you'll be saving doing it yourself can be very costly.
So, many people say, well, wait a second, with the Tax Cuts and Jobs Act, are we paying less in tax now or are we paying more in tax?
Let's just get that out of the way first. The vast majority of the middle class paid less in taxes in 2018, although many say they didn't notice the bump in their paychecks because it wasn't exactly a windfall, and other costs like insurance went up.
Where it gets a little confusing is people got a little bit more in their take-home check, and some people didn't even pay attention to it. And then at the end of the year, they're like expecting this big tax refund. Well, they got it a little bit at a time all throughout the year.
But some middle-class taxpayers will end up paying come tax time, particularly those who used to itemize their returns for things like unreimbursed business expenses and charitable deductions. Those are pretty much gone. Families with 5 or more kids will also likely take a hit since the personal exemptions were wiped out, more than $4,000 per parent and child.
They raised the standard deduction up, and they gave some tax child credits to offset the elimination of the personal exemption. But ultimately what's happened is they may be paying a little bit more in tax.
Because it still won't match what they used to get. But you can offset some of your tax bill and put money in your own pocket instead of the government's, even if you already filed.
You can still contribute to an individual retirement account or an IRA to reduce your taxable income. You have up until April 15th to do that if you qualify.
It's the same for contributions to a health savings account. For those who filed, make those contributions and file an amended return. But if you still owe or like getting a refund, change your W-4 withholdings or allowances as soon as possible so you don't take a hit again next year.
It doesn't need to be a big, scary situation, right? Especially if you're working with a tax professional, because ultimately they're going to be the one talking to the IRS on your behalf if there is ever questions that arise.
But things are so different this tax season that preparers at H&R Block underwent quote-unquote empathy training for how to handle clients upset by bad tax news. But since I know plenty of people still want to do it themselves, tomorrow at 6 we'll look at the best software programs for different tax situations, Russ.
Empathy training, interesting.
People are upset because they were expecting a big refund and they're not getting as big of a refund, or they find out they owe.
Yeah, all many people heard last year is you're going to get more money at the end of the year, but didn't think about the whole withholding.
They got it over the whole year, a little bit.
Whether they know it or not, right?
Yep.
All right, Danielle. Thank you.
Okay.